Morning, Chris Worden. Um, I'm doing a video for you today, and the video is aimed at you if you took a bounce back loan and you've spent it on wages. You've spent it on general running costs, mortgage, food, wages. Lots of people have, by the way. Now, potentially, that could cause you a problem if your company goes into liquidation, and I'm going to explain to you why. Most directors of small limited companies in the UK, they take a small amount salary through the pay-as-you-earn scheme. Just over £8,000 is like the optimum director's salary, and the rest they will take as a dividend. So I don't know, let's say someone's on £4,000 a month. They take just over £800 as salary, and they top the rest up via dividends. And they've done that year in, year out. They give the books to their accountant at the end of the year. The accountant does the accounts, declares a dividend, get a corporation tax bill. You pay the corporation tax bill, no problem here. What's changed, though, it's critically important, this is you can only take a dividend from a company that is making a profit. Now, lots of companies since COVID happened, have their revenue has fallen off a cliff, that they've no longer made a profit. A lot of companies have made a loss, but the director has continued to take a dividend. So listen, let me give you an example, right? John, you know I like the name John. John takes £8,840 as a salary. It's classed like as the optimum salary. He tops his wages up every month to £4,000, done that for years. Now, this year he's not made a profit, so he's gone into his accountant to put his books in. Let me just have a bit of caffeine. Yeah, this year he's not made enough profit to declare a dividend, but he doesn't know that yet. But he's continued to take his salary, and he's topped it up every month using his bounce back loan, because in John's head, he can use his bounce back loan for wages. Now, what John didn't realise is you can't really use a bounce back loan for dividends. Most people can't anyway if there's not enough retained profits in the company. John has had a nasty surprise because his accountant's done his year end and he sent him a draft, and he says, John, you've got an overdrawn director's loan account of 39,000. John's gone. So John owes the company now £39,000. Scary scenario, but it's happening all the time. John does not have the £39,000 to pay the company. To make matters worse, John's business hasn't bounced back, and he knows at some stage this year he's potentially going to have to seek insolvency advice from an insolvency practitioner. When he goes to see the insolvency practitioner, the insolvency practitioner is going to go, John, you have an overdrawn director's loan account of £39,000. When he goes into liquidation, he's going to send him a letter and go, John, you owe £39,000 to the company. If you don't pay it back, I'm going to take legal action against you. Sounds severe. Let me tell you, this is happening across the country right now. It is a huge problem. That director's loan account, which John didn't really know that he had, he thought he wasn't doing anything wrong, is an asset of the company, and the insolvency practitioner, let me spit my teeth out. The insolvency practitioner's job is to recover the asset of that company and distribute it to the people that John's company owes money to. Listen, if you've used your bounce back loan for wages, general living costs, listen, I have no judgment whatsoever. If you've got kids to feed, if you've got a mortgage to pay, if you've got nursery fees to fork out for, I don't think anybody can say they wouldn't have done the same in your position. But if you go into liquidation, potentially this is going to cause you to have an overdrawn director's loan account, and it can be really, really serious. If you have resonate with some of the things I've said today, you've used your bounce back loan, you spent it on living and getting by, but you don't know whether you have a director's loan account and you're potentially looking at closing the company, get in touch with me. I will help you understand, A, have you got a director's loan account? B, how much is it? And C, what are you going to do about it? Because the best way to deal with an overdrawn director's loan account in liquidation is to tackle it head on, be very proactive, and broach the subject with the insolvency practitioner. Don't think for 1 minute nobody's going to check. It might not get found out, because it will do 100%. Once you appoint the insolvency practitioner, they're going to review your bank statements. They're going to see that you've got an overdrawn director's loan account. And the problem is, if it comes out of the woodwork at that point, you have very little room for negotiation, in my experience. So I hope you found this video useful. If you're thinking of closing your company down and you've taken a bounce back loan and you've used it just to live on, please go back and watch this video again. I hope I've explained it well enough. And if you want to have a chat, all you have to do is reach out, give us a message on our inbox. Keep following us, First Business Rescue. We're here to help you understand UK insolvency, corporate insolvency. It can be a minefield out there. So thanks for everybody that's watched this video. Give it a like, give it a love, give us a share, give us a comment to boost us up those those social media rankings. All the best. Have a good day. Bye bye.